Your contribution to the show, just use hashtag MarketDay to get onto Twitter, or you can follow us any other way with that email address on screen for you now. Well, let's go to Julia Lee first from Bell Direct. Julia, all things considered, great run. Did you see it coming following that gain on the street? And indeed, what sort of setup have we got now likely for tomorrow?
Carson, it's all expectations of quantitative easing which is driving the market at the moment. We saw the US up a massive 2.3% overnight, and the Australian market doing well, up by 1.3% with $4.3 billion being traded. Still, our market underperforming the US as well as the Korean market, which managed a gain of more than 2%. And that tells you that a lot of investors and traders are really ignoring the good run of domestic data that we've seen here in terms of the GDP numbers and the employment numbers for what's happening overseas. If we have a look at today, we saw a fantastic set of job numbers out for May. The market was expecting to see a flat result. Instead, we saw 38,900 jobs being added, and the month of April we did see a revision. Unfortunately, it was negative revision, and we only saw 7,000 jobs being created there. The jobs numbers did have a small effect on the market, but not a huge one. In fact, we only saw a move of about 0.1 to 0.2%. So really all eyes on Bernanke tonight and his testimony in front of the Senate in the Joint Economic Committee. And I guess the market really just watching for signs of quantitative easing. So let's hope they haven't pinned their hopes on nothing. And of course the Bank of England meeting tonight as well, where the market expectations around quantitative easing have been building there too. The banks were the best performers on the market today, and the rate watch still on. We haven't seen any of the big four banks passing on that interest rate cut that we saw by the RBA, but we will see the ANZ monthly interest rate decision tomorrow. So it could be that ANZ's the first out of the big four to move.
Yeah, for a moment. In terms of the strategy from the Fed, could we also see a pushback on raising rates, a clear signal that that policy is on ice for the foreseeable because of jobs?
I don't think the market is expecting the US Federal Reserve to raise rates over there anytime soon. In fact, the market indications are for more quantitative easing, so adding more liquidity to the system. And we've seen what that has done in the past, and it's been great news for commodity prices, things like copper prices rising quite substantially. But the other thing for Australian investors to be aware of is the impact it has in terms of currencies. In terms of QE2, we saw the Australian market hugely underperforming the US market while QE2 was happening. The US market was up by 22%, while the Australian market was just up by 2.5% while QE2 was happening. And part of that was a very weak US dollar helped the revenues of a lot of the US listed companies, offshore revenue, while Australian companies, the ones making revenue offshore, that Australian dollar was a huge headwind. And the Aussie dollar heading back towards parity. If we see Ben Bernanke even hinting at QE, we could be testing that parity mark tonight.
Shun, Julia, that offer to buy the business from potential private equity suitors. Are they going to live to regret that? A bit like the offer on Qantas at $11 billion from private equity, that in today's money looks like a fantastic offer they should have said yes to.
I think it's a little bit different in the case of Brambles trying to sell the Recall business, because it is a hard environment to sell assets into, whereas Qantas, it was a time when the stock was trading at quite different levels. In fact, that private equity offer was around the $7 mark. So I guess a lot of shareholders wishing that that private equity deal went through. But if we have a look at Brambles, have a look at Ten, these are both companies that are trying to offload some of their assets. In terms of Brambles, it had been trying to offload Recall. In terms of Ten, iCorp, and it's a very difficult environment to be offloading assets into. So instead what we've seen is a capital raising to de-stress their balance sheets and ease some of the pressure to sell these assets. In fact, Brambles going to keep Recall now. Instead, it's done this capital raising, and it's going to have a dilutionary effect of around about 3%. So what we've seen is that investment houses, brokers, they haven't really been too negative in terms of adjusting their 12-month targets and their recommendations on the stock. So we have seen most investment houses keeping their recommendation on Brambles. The share's down 5%, but not a bad result given that discounted capital raising. And of course, the discount on Brambles capital raising much less than the one on Ten that we're seeing at the moment, which is quite a steep discount of around about 20%.